Okay, let's dive right into this fascinating explainer about how the small Himalayan kingdom of Bhutan quietly and completely transformed its national economy. Now, for decades, Bhutan has been celebrated all over the world for prioritizing gross national happiness over sheer economic output. But behind those serene monasteries and stunning mountains, a very different kind of revolution has been quietly humming away.
Picture this. At their peak, Bhutan held over $1 billion in sovereign Bitcoin. To put that into perspective for a moment, that single digital asset accounted for roughly 40% of their entire GDP. 40%. And you know what the truly remarkable part is? They didn't buy it on some exchange, and they definitely didn't acquire it through law enforcement seizures like some other countries. Every single digital coin was mined by the state, entirely in secret, using their very own natural resources. In this explainer, we're going to map out this modern-day gold rush. We'll look at 1. The green crypto kingdom, 2. Hydropower meets digital gold, 3. The Economic Balancing Act, 4. The Great Bitcoin Sell-Off, and 5. Building the Mindfulness City.
So, let's kick things off with Section 1, the Green Crypto Kingdom.
It actually all began pretty cautiously back in 2019 with a regulatory sandbox pilot by the Royal Monetary Authority. But then, the 2020 pandemic hit. It absolutely devastated global tourism, which was a massive source of foreign revenue for them. So in panic mode, Bhutan's sovereign investment arm rapidly scaled up a secret mining operation. Things escalated quickly. We're talking a $51 million import of ASIC computer chips in 2021, and by 2023, a massive $500 million partnership with Bitdeer to build a massive data center in Jigmeling.
Now, what's brilliant here is how the government views this. They don't see Bitcoin merely as some risky, volatile speculation. Ujjwal Deepdahal, the CEO of Bhutan's investment arm, hit the nail on the head when he famously described Bitcoin as a strategic battery. See, Bhutan generates massive surplus hydroelectric power during the summer when the Himalayan glaciers melt. So they use crypto mining to literally monetize and store that excess energy. They are essentially converting water into a liquid global reserve asset.
Moving on to Section 2, Hydropower meets digital gold.
Instead of relying on traditional methods to build wealth, Bhutan engineered a really clever four-step process. First, you have these fast-flowing Himalayan glacial rivers feeding into massive, state-owned hydro plants. That electricity is then fed directly into industrial-scale data centers packed with ASIC mining rigs. Because these rigs connect straight to the national grid right at the source, Bhutan gets to mine Bitcoin at a near-zero energy cost. It's a massive, massive advantage for rapidly compounding sovereign wealth.
And this brings us to green mining. That's utilizing carbon-free, renewable energy sources to power cryptocurrency generation. We all know the crypto industry gets heavily criticized globally for its massive carbon footprint, right? But because Bhutan relies entirely on those Himalayan waters, the state maintains that this mining operation is completely carbon neutral. They've basically bolted a 21st century digital asset directly onto their most abundant, zero-emission resource.
Which brings us to Section 3, the Economic Balancing Act.
Now, it's not all sunshine and rainbows. It's a real balancing act. The wins are absolutely undeniable. The profits from mining funded incredible 65% wage hikes for civil servants, which prevented a massive brain drain. And they slashed the national poverty rate from 28% down to just 11.6%. But there is a heavy cost. The immense power draw from these mining rigs means Bhutan's lucrative hydropower exports to India actually dropped by over 50%. The grid is so strained now that Bhutan literally has to import electricity 4 months out of the year, which has significantly widened its trade deficit.
And then, the underlying economics suffered a huge shock. In April 2024, the Bitcoin network underwent its routine halving, which basically cuts the miner rewards in half. Overnight, the cost to mine a single Bitcoin in Bhutan skyrocketed to nearly $38,000.
Plus, it wasn't just the halving. Global mining difficulty hit a record 144.4 trillion. Combine that squeezed margin with the urgent need to route surplus power back to India just to generate cash and fix their trade deficit, and well, Bhutan's older ASIC rigs simply became economically unviable. Their highly profitable operation pretty much hit a brick wall.
So, what happens next? Section 4, the Great Bitcoin Sell-Off.
While state officials kind of publicly downplayed their market moves, the on-chain data tells a very clear story. Bhutan ended up liquidating roughly 75% of its peak reserves. That is over $1 billion worth of crypto. Now, they didn't just dump this all on open exchanges. They were smart. They heavily utilized structured, over-the-counter trades with institutional firms like QCP Capital to avoid crashing the market. Today, they only hold roughly 3,100 Bitcoin.
Financial analysts are quick to point out that this wasn't some kind of panic sell, but actually a highly rational pivot. Before 2024, the goal was simple: accumulate and build wealth. But moving into 2025 and 2026, the strategy shifted to optimize and active spending. I mean, holding digital gold forever is fine for a private vault, but Bhutan is a sovereign nation. They have to fund schools, pay salaries, and build real-world infrastructure.
And that leads us to our final part, Section 5, Building the Mindfulness City. So, where is all that liquidated capital going? It's largely flowing into an incredibly ambitious project called the Gedu Mindfulness City. It's designed as a futuristic, eco-friendly special administrative zone that fully embraces blockchain infrastructure. Thanks to a partnership between Binance and Bhutan's DK Bank, crypto tourism is actually becoming a reality there. Tourists can literally pay for flights and street snacks with cryptocurrency. Meanwhile, the state captures revenue through a very clear 22% corporate tax on crypto firms.
And they aren't stopping at Bitcoin either. To further diversify the local economy, the city recently launched the TER token. Named after the Jonka word for treasure, this is a digital token on the Solana blockchain that's backed by physical gold reserves through a partnership with Matrix Stock. It's designed to bridge traditional, tangible gold with modern digital finance, though, of course, it does rely entirely on absolute trust in institutional custody.
But hold on a second, because there is a massive unresolved hurdle right now. The government originally pledged 10,000 Bitcoin to help seed the development of this mindfulness city. But because of those massive sell-offs required to fund immediate domestic needs and manage the trade deficit, Bhutan's treasury currently only holds about 3,100 Bitcoin. They simply no longer possess the native cryptocurrency they originally pledged to build their future. It's a serious bottleneck.
Which leaves us with a truly provocative question. As Bhutan attempts to balance its ancient traditions of gross national happiness with the highly volatile world of digital assets, will this incredible, high-stakes economic experiment secure their future and become the ultimate blueprint for the developing world? Or will the sheer volatility and massive energy demand strain their resources to the breaking point? We don't know yet, but one thing is for sure, the whole world is watching closely.